G'day traders, I'm Greg McKenna. Welcome to Markets Morning. It is the 13th of December 2018. I've just tested this. You can hear the jackhammer in the background, but I think it's low enough so that you can hear my voice, and my voice is loud enough. So I do apologise about that. We're still getting work done here in the office. Anyway, last night was an interesting night. Yesterday, after the Donald Trump comments or the Reuters story about Donald Trump, I did decide to get out of my short position in the S&P 500, which I talked about, on the basis that I thought it could run to sort of 77 to 83, and then we'd see what happens. Well, that's exactly where the high was, in that zone. When I got to my desk around sort of, well, when I first started looking, just before 4 o'clock my time, so what's that? That's about lunchtime in New York. That's where it was. And then it fell, and the S&P futures, the ES futures, finished at about 26.50. So it's a couple of points above where I got out of that. The question is now, what's next? Now, if you have a look at that long-tailed candle that we've got there, the last 4 days, the last 6 or 7 days really, of trade have been all about volatility clustering, haven't they? We've got these long-tailed falls, we've got these long-tailed rallies, we've got these big falls, we've got that star up the top there, or that, you know, that doji. So what do we got? We've got a market that is getting thin. Now, what happens when things get thin? People get moved around, liquidity is lower, it's easier to push markets around, as we've seen. The question, though, is where is the next positive catalyst? It's pretty clear that the Chinese are genuinely working to get an end to this trade war. But you've got to ask yourself, if the market can't hang on to its rallies and can't even get back to the middle of the range, whether or not it does need to go lower. Now, you know my view in the medium term? The medium term is that Jimmy R has crossed, and so lower levels beckon, at least 2,500 and probably in time 2,000 to 2,100. So any get out of short in that longer term sense is a tactical move. I was hoping for 27, hoping for a little bit higher. In fact, I was hoping for a run all the way up towards 2,800. Hasn't happened yet, still might. In 200-day moving average terms, of course, it's flattened right out. That tells you there's no trend. So we're bouncing up and down and up and down and up and down. That will turn slightly lower if the market stays where it is. But it's an interesting time at the moment. I think the Fed next week is going to be slightly more hawkish than is covered in, or slightly less dovish is probably the best way to put it. And that being the case, there is a headwind there for the US stock market. So just quickly around the grounds, I know that was a long introduction. They're actually pretty good up days, you know, 0.5% for the S&P, 0.6 for the Dow, 0.9 for the Nasdaq, and you know, obviously really good rallies in Europe. But that sell-off in the futures, which even continued after the close, is a warning that this is still a nervous market, a bear market. Foreign exchange, we're still bouncing around inside the range. Sterling recovered. We'll talk about that in a sec. Recovered nicely. Theresa May got to keep her job, which is good for her, but still messy for Brexit. The EU is trying to signal to the UK Parliament that they want to work with them. It's in nobody's interest, a hard Brexit. It doesn't help anybody. And so we'll have to see how that evolves and what happens on Parliament. But we're basically back at the breakdown level now for sterling. The Aussie is a little bit higher. The yen hasn't moved that much. Gold neither. So let's move on. We'll keep going through stocks. Dow Jones, another long tail. That 15 moving average, holding it in at the moment. The Nasdaq, another longish tail. It's further away from the issues that the S&P has. Different index, obviously. Overall, though, still in a downtrend. Look at it on the weeklies. We've had the Jimmy R crossover, but realistically, they're all just in a range. So I can't get too excited or exercised about having a strong view unless or until that range breaks. Now, the Aussie market is struggling a little bit. We rallied nicely over the last couple of days. Futures are off 13 points. That doesn't mean we have to be down today, but it does suggest we might struggle a little bit. We are well south of where we should be if it was just a kind of a correlation between the S&P and the local market. There are a lot of headwinds coming for the local market. The question is, when will they be factored in? Now, if you believe Shane Oliver, who's the chief economist at AMP, or me, that there's another 10% fall in house prices coming, then that suggests the worst of the funkiness for the Australian economy are not finished, which poses issues for the currency, for the stock market. And then if you have a look at Chinese data, the money supply data, the inflation data, the trade data, those kind of things, you can see where the local market may have some issues, and likewise the Aussie dollar in time. In terms of the DAX, we might get to fill this gap. Be interesting if we do fill that gap, and if we can get and hold above, say, 11 or 11.1. That for me would be very interesting. On the weeklies, you can see that you'd need to get back realistically. That was a very ugly bearish engulfing. You'd need to get back above 11,000 and hold above 11,000 to turn the outlook at least less negative. Turning to currencies now, the ECB's tonight. We're going to see an end to QE. We have inflation in Europe around the central tendency that the ECB is looking for, but we've had a downgrade to growth. Now, the ECB is a single mandate central bank, so they can argue that they're on target and blah, blah, blah. But the Germans, as I mentioned yesterday, have downgraded their growth. So what are we looking at the moment? We're looking at a euro that keeps, respecting this little wedge that we're in, and a break would be a signal. On the top side, you'd need to get up and through 114.40, and on the downside, 113 for me is the level. So basically 70 points either side. If you drop down to 4 hours, that might be a bit of fun to play with, particularly with the ECB. My sense is we'll rally into the ECB and then see what Mario Draghi has to say. In terms of my positions, I haven't really changed anything except that S&P. Short Aussie, going nowhere. If it gets through 40, I might. These are medium-term positions. If it gets through 40, it could run another 60 to 100 points, and then that might be a good place to sell some more. In terms of euro, still got a small short on euro. Aussie yen, small short on Aussie yen. These are tiny little lifestyle positions for the medium term. And with sterling, I've sold some sterling as it's come back to retest the breakdown level with a stop on the other side of it. So that's all I've got at the moment. Oh, Kiwi as well. I'm short Kiwi. Forgot about that one. Dollar yen, nothing here at the moment. We've got this little downslope. The reality is everything's in a range at the moment because it's not clear. If the Fed is less dovish than the market thinks, then the US dollar could grab a bid. Is it in the Fed's interest to be really dovish? No. It's in the Fed's interest to signal a pause, because what the Fed wants is the economy to basically do what the Australian economy's done, is just keep growing at, say, 2, potential's 2, but 2 to 2.5% for the next 5 or 10 years would be perfect. It'd be great if potential could be increased and it could grow at 3 or 3.5%. But it's unsustainable where it is at the moment. So it's moving back down. I think both the Atlanta Fed and New York Fed are at 2.4% or thereabouts. And, wisdom tooth thing. So, we're really just waiting to see what the Fed does. Japan, if you think about it, dollar yen should be much stronger than where it is relative to, the key drivers of it. But at the moment, we've continued to find resistance at that 114.50 to 114.75 region. And just at the moment, we're finding support. So, draw a box around that. Nicholas Davis wasn't wrong. He danced around the world and looked at things on the weekend. So this is where we are with Brexit. Every chance that we can get back to 127.09 or something like that and still be going lower. But a breakthrough there, and then you run towards the 30, which is 127.80. If it got above 127.80, which has constrained it now since that big fall for the last few weeks, then the top side starts to open up, as I mentioned. Aussie US dollar. So what have you got here? You've got 4 days, including that one, where the high's been around 40. Last night's high was 37, I think. What you've got, a break of 40 changes the outlook. So 60's held. The low this week's only been 77. 60's held. So if you remember what I said on Monday, I'm not going to get too bearish unless 60 goes. 60 has not gone. So we're up near 40. If 40 goes, then I can see, well, we're not up near 40, we're at 18, but if we get up and through 40, then I can see a run towards, back towards this trend line, and that might be where, aggressive sellers might add. Dollar CAD has, I know I moved that yesterday, so I don't know why it's back there, but it's just eking out. That's the key level now in the very short term, 134.40. Now, dollar CAD was down despite oil reversing. This is just the US dollar ebbing and flowing, and ebbing and flowing, and just waiting for the moment. Now, if I look at dollar yuan, so the rally aborted pretty quickly. This is where the positivity about the trade truce seems to be most easily reflected. Now, if we have a look at that, that doesn't tell us anything. Maybe we should just draw a flat line across there and then draw a flat line across there. So what's that? That's 674. If you look at it on the weeklies, then basically that low is 682. So, yeah, 682. So we're currently having an inside week by the looks of things. We'll just see where it goes. But there's no impetus for it to go higher. The Fed might change that, but the reality is the Chinese are trying to work with the Americans. And even when it wasn't as evident that they were working with the Americans, we didn't get up through 698 or 7. So I look at a chart like that, and I know it's a bit like dollar Sing, but I kind of expect it to come down. I kind of expect it to trade to 669 or something like that. And speaking of dollar Sing, we've rolled over again. So it's not the biggest of ranges. We've got that uptrend. It's broken back in and it's holding now. But I wouldn't want to see, if you're a dollar bull, and I'm kind of nothing at the moment. I'm not a bull or a bear. It's in a range. If it breaks 112, then yeah, I'll get really bullish again. If it broke 115, I'd probably get bearish in terms of euro, and that would reflect other. I'm using euro as a bellwether. The interesting thing for me is if Britain does get this all sorted out, could a sterling rally back to 130 or back to 132 or 33 change the outlook for the dollar? Yeah, might be able to. Anyway, I'm sorry I'm talking so slow. My wisdom tooth is killing me. Gold. A bit more of the US dollar in this than maybe some people think. Stocks up, stocks fall. My sense is if gold can finish the week in this 1240, here they come again, in this 1245 region, then it can start to rally. But it's got to get up and through. Look at this. It's one of those, interestingly, I found another one that's like that. It's one of those rare commodities that really does, or rare assets, that really does respect the 200-day moving average, or at least traders do. And that's the key. I'm a behavioural finance and economics guy. And the key is that I'm trying to figure out what other people are looking at so that I know what they're going to trade. There's nothing mythical. My Jimmy R is a little bit mythical, but most of the things I do are all about patterns repeating, what people look at, trend lines, all those kind of things. So to that extent, if people are watching the 200-day moving average, then so should we. Silver in a range, but getting up towards the top, which is really interesting. 1490, 1390. Copper still respecting. Hasn't really kicked on, didn't do a lot. It was up 0.3 last night, so we'll keep an eye on copper. If copper breaks out, then we'll know something's up. Oil, smaller than expected inventory draw from the EIA. The Saudi OPEC data shows the Saudis were pumping the heck out of things. Shales through the roof. Citibank saying that the OPEC will need to cut again because of shale's strength. And, it's 2 million barrels over the last year or so. That shale's increased, and it's going to keep going. Some of those bottlenecks are going. So what do I look at? Go down to the 4 hours, nice little wedge. Basically, if last night's high low gets taken out, then we'll have a little bit of a run lower. But you can see here, we're just in this range, and that's the same for Brent. Where is Brent? Brent, similar sort of story. It can't sustainably get out of its way, but I'm not going to get bearish unless the lows go and close below on a day basis. Bitcoin, last but not least, basically going sideways. Not enough bars on there to make any sense of it, but basically going sideways, doing nothing right here and right now. Righto, that's it from me. Sorry, it's a bit shorter than normal. Sore tooth, noise, all that kind of stuff. Back to normal tomorrow. Hopefully I'll get this tooth looked at. Have a great day's trade. Keep your eye on what's going on with Brexit. There seems to be a little bit of impetus for sterling to try and go higher. 127 figure 10 is the key level to watch for me. Although on the day today, if it gets up and through sort of 126.70, it might go for a gallop as well. So keep your eye on that. A lot of stuff coming out of that. Other than that, ECB is the big one. A dovish end to QE is what I'm expecting. Anyway, we can talk about that tomorrow. Bye for now.